What is up, guys? Down Bad Taiki here, and in this video I just want to discuss the recent events, notably the Three Arrows, right? Implosion. Like that was surprising. And what do we even look forward to from here, right? Where do we go from here? I feel like every day it's just like bad news after bad news and fear after fear. And can we just like have 1 week of at least no news? Can we have some peace? Probably not, but you know, that's just the world we live in right now. So let's get right into it. None of this financial advice, and of course, like if 3AC goes belly up, then like what makes you think I know anything, right? Like I'm just like some random dude on the internet talking about crypto coins. Like like even last week, right? Like I made a bullish video, right? 7 reasons to be bullish crypto. I was caught totally offside, so I'm just like some pleb, all right? So that being said, let's talk about the 3AC implosion. I just got a phone call. I think it's a margin call, but if I ignore it, then it's probably fine. But anyways, let's talk about the other entity getting margin called, 3AC. So I think they turned like 100 million into like 10 billion at the peak. So obviously they have a crazy story, and they were the thought leaders in the space. Like super cycle, all that. A lot of people thought that they were just saying that to like dump on people, but it turns out, they actually believed in what they said. I had dinner with Jordy Alexander a couple of days ago, and this is like right when the news was coming out, and we were just like, oh no, Sue, like how can this happen? But turns out it's, from their sources that I know, it's real. I heard it's like pretty bad. So we'll see what happens. But I guess in terms of like more actionable things, I heard that they have like more like liabilities and assets. Don't quote me on that, but that's what I've heard. And of course, at this point, it's pretty wild because they were like leveraged, right? So they borrowed money. They took on under collateralized loans from like BlockFi, Deribit, other entities, and now they can't pay that back, right? So they had to sell off all their liquid assets. So maybe that's why we saw Three Arrows assets like Solana, Near, Avalanche, like Mina, like those assets just like all dump, right? Because they had to sell those to meet those margin calls. I know they also have like longer term assets, like illiquid assets. I know some of their L1 assets are locked up for at least a year, so maybe they have to sell that at a discount. Like who knows what's gonna happen, right? But the word of the day, right? The word of the day is contagion, because obviously the Luna blow up had a contagion effect, right? So obviously Three Arrows was negatively affected by that, and perhaps it led to their demise. And it also led to, Celsius potentially losing money, all that. And we have to consider the contagion effects of Three Arrows going down. And one of the things that we've been seeing is, of course, Deribit, BlockFi, are they okay? Both those companies, their Twitter accounts came out and said, yeah, like we're fine. We liquidated Three Arrows. Or, even if we take a hit, like we're going to be fine. So hopefully those companies are okay. But even, there's this news coming out where Three Arrows invested in different seed rounds of companies. Obviously, they paid in USDC and Tether, and they offered to manage their treasury and offer 8 to 10% yield, right? And at this point, then are those treasuries gone, right? Like if you're a project that accepted money from Three Arrows and they managed their treasury for them, and now they're margin called, like what happens, right? And this is not confirmed, right? So obviously, none of this is confirmed. It's just a screenshot I found on Twitter, so I could be wrong here, but Ardana, Three Arrows invested in Ardana, and they were offered, this treasury management service. They declined, but you should expect that, some other projects maybe agreed to at least give them half the treasury to manage for them, because these devs, they're not like trying to yield farm with their treasury, right? Like they're just like, okay, like we raised some money, we're gonna use this for runway, and we're gonna build. So there's so many things that could go wrong here, right? We're experiencing the after effects of Luna a month after, and perhaps a month, like, in mid-July, we can hear more bad news about, like XYZ things happen because of Three Arrows. So it's pretty wild, right? And I don't want to sound like an ETH maxi here, right? But if you think about it, all the bad things that's happened when it comes to like the Luna implosion, Celsius, Three Arrows, it's like none of these happened on chain, right? Like these are all off chain things that were hidden from the public, the lack of transparency. And, when they go under, then, we have to feel the blunts of it, right? As in like for sellers. And if you think about protocols like Uniswap, Curve, Aave, Compound, Maker, they all function properly. Of course, gas fees spiked up. Some liquidation engines didn't work because Chainlink oracles weren't updating on time. But I feel like in an ideal world, right? Don't want to sound like an ETH maxi, but also, coming from like a DeFi maxi perspective, if everything happened on chain, then we wouldn't have to worry about things like this. So, I feel like we're just like kind of repeating the mistakes that traditional finance made, where, these bad loans and like bad things were happening behind closed doors, and once they blow up, then we find out after, right? And I feel like DeFi, I guess like Bitcoin in general, was created so this won't happen, but it's just happening again. So hopefully, builders and like companies will learn from this, and we can get out to the other side in a more positive manner. But I'm like, I feel like it'll take a long time, because confidence across the board is just crushed, right? And I'm not going to talk about macro stuff, right? Because I'm not going to claim to be a macro expert, but there's also those factors too. And now let's kind of pivot to, okay, like markets are down bad, right? I mean, obviously there's value here, but where do we look for opportunities? And don't get me wrong, like I'm not like buying things right now, and I'll provide my idea on why I think it's better to look for new projects over old projects. And I have this little, it's not really a thesis. I just have thesis on here because it just makes me sound smarter, right? Anyone that adds a thesis at the end of something, put monocles on, sound smarter. I kind of call it the EVM saturation thesis because it kind of mostly applies to EVM projects. But I think what's more, I guess, what like the term that applies more to what I'm trying to say is like the bull market technical debt thesis, right? And I'm not even like fully convicted on this, but I feel like I'll go over this later too, but I feel like 99% of DeFi tokens launched in 2021 are just going to be zeros. I think there's a better risk reward to invest in either infrastructure, where you can make more of a chain agnostic or project agnostic bet, or newer launches than old stuff. And let's kind of go over why I think that is. So let's define technical debt, right? This is like what developers use, but in software development, technical debt is the implied cost of additional rework caused by choosing an easy solution now instead of using a better approach that would take longer. And this happens a lot in bull markets. This is a little comic that I would want to show to illustrate this, where devs find an opportunity. They're like, oh my god, like we need to capture mindshare, attention, TVL. Let's build fast. And then as soon as something bad happens, they worked so fast, they didn't think about like longer term about the ramifications of their protocol design, tokenomic design, that once damage is done, it's already done, right? There's no coming back. And in bull markets, devs rush code, tokenomics design, like whatever, to satisfy demand in a bull market, right? Capture TVL. In a bear, there's not much devs can do to turn their project around. So if a new project launched in the Q4 of 2021, in like whatever tokenomic model that they proposed, there's no coming back, right? Because you can argue that like, I know more about tokenomics than the average developer. Like if you hire me, right, and you say, Taiki, here's $10, right? Can you fix our tokenomics? I'm gonna say like what do you want me to do, right? Like there's no going back. Sure, I can introduce a VE mechanism and convince 10 people out there to lock up their tokens for 4 years, but that's not gonna change anything, right? So in a raging bull market, I primarily focus on EVM because it's easier to deploy applications on EVM, right? And we had a bunch of forks. Money's flying around everywhere, you're competing for eyeballs, and teams are incentivized to fork existing projects, get a minimal viable product out there, right? MVP before others, and just get it out there. But this type of activity mentality sacrifices long-term staying power because they prioritize short-term fundamentals, and you kind of understand why Bitcoin maxis and ETH maxis exist, because they've gone through all this before. And looking back, it's like, yeah, things pump, but things go down, just as fast. And they just like want to focus on Bitcoin Ether, and I totally respect that. And there's parts of me that are still Bitcoin ETH maxis, but I'm always looking for new stuff, right? Trying to keep an open mind. Because if you think about it, we often think about these L1s as like network effects, right? Oh, like Phantom has a network effect because they have a strong community. But do they actually have network effects? And if you think about it, I feel like whatever network effects people thought these L1s had, like, doesn't really exist, right? Aside from Ethereum, obviously. Which native applications on Avalanche, Phantom, Harmony, Matic has staying power, right? Key differentiators. I think Avalanche is more likely than these other chains, but still, right? Like, what native applications on Avalanche has key differentiators and have staying power? You can argue like Trader Joe, right? They have a strong team, but do they have a moat? Platypus, their design is pretty interesting, but do they have a moat? I'm not sure. So any biases that we've had in the past 12 months, I feel like it's just best to just throw that away. And I feel like, yes, I'm like, I obviously don't know what I'm doing, but I feel like the one thing that I am good at is to not marry bags, to not have my previous biases affect my future decisions. And I feel like that's how we should all be thinking about things, aside from Bitcoin Ether, right? I feel like those two assets will trend up over time, though it feels like crypto is dead right now. In bull markets, we just like had this type of behavior, like VE tokens, convex of these tokens. Current iteration of tokenomics isn't made for a bear since it was made for a bull. And I'm not saying anything bad about these devs, right? These are all experiments, financial experiments. And who knows, like maybe some, maybe curve and convex, right? They'll come out of this alive. But, if you think about your time, right? Because your time is valuable, right? The fact that you're watching this video, right? Thank you, I guess. If you're going to spend an hour of your time researching into old projects versus looking for new projects, I feel like your time is better off spent looking for new stuff. In terms of like risk on, right? Attractiveness, I've maintained the stance of, I think Bitcoin, a safer asset, obviously, right? Bitcoin over ETH over infrastructure plays, right? Infrastructure meaning L1s and other like chain agnostic bets, and over old DeFi. That's kind of my mental model and how I'm approaching the markets. I'm not like buying anything, but looking for it, right? I feel like infrastructure and new launches probably has a higher probability of succeeding over Q3 and Q4. And I'll provide some examples of that. Existing DeFi can still do well, but let's say we have 10 winners by the end of the year, right? Maybe they start pumping in Q4. I mean, I don't know, right? Like I'm not claiming anything, but simplified mental model. If we have 10 winners coming out of, I guess, this phase, I think it's more likely that maybe 6 or 7 are new projects and 3 or 4 are older projects on average, right? Just the simplified mental model. So in this case, I just think that right now there's like hundreds of old projects, right? So picking the few winners, I think it's gonna be very difficult. But for the new projects, these developers observed and learned from mistakes that developers made in the past, and they're gonna fix those issues. They're gonna learn from those and then try to launch a better product. I feel like those products will just do better. So that's kind of how I'm thinking about the market right now. But obviously, right, in the words of Ruth Langmore, I don't know shit about fuck. I could be wrong. I'm probably wrong. So examples of infrastructure, right? L1s. I think, it's easier to bet on L1s over projects building on top of L1s. And L1 bets are kind of difficult because, like I said, like what network effects do these L1s have? Is it best to bet on Avalanche, Solana Near, Cardano? I mean, it's very, very hard. So maybe a more lower beta play is to bet on things like Oracle's Chainlink, right? I'll talk about the fundamentals of Chainlink, or things like Stargate Layer 0, cross-chain messaging protocol, right? So maybe stuff like that will do better, right? I have no idea, but that's kind of, I'm just kind of sharing like how I'm thinking about, how I'm observing the markets. So for example, Chainlink, right? Chainlink has kind of been a meme. Of course, they outperformed in the 2018, 2019 bear market, but sure, Chainlink, everyone uses Chainlink oracles, but there's no value growth to the Link token. But now they're introducing staking at the end, at the latter half of 2022. And the first thing they'll introduce is version 0.1, which is going to be capped in Link deposits. APY is going to be capped at 5%, so it's not really going to cause any fundamentals. But over time, as Chainlink staking gets involved, or gets rolled out, V1, V2, maybe 2023 and beyond, I feel like there could be more value growth. Because the meme is, sure, Chainlink secures a bunch of data, but there's no value growth of the Chainlink token. But if there's Chainlink staking and there's economic value in staking Chainlink, then that could cause for actual value growth, right? We have to think about organic demand drivers to drive the prices of these tokens, because money inflows are lacking right now. So if anything isn't go up in the future, there just has to be natural demand factors instead of like people speculating on these assets. That being said, let's talk about some farming strategies, right? So these are the ways that I'm farming. Obviously, do your own research. I'm going to talk about some things that are newer, and I mean, it's not really new, but it's just do your own research, right? I mean, I'm after Luna, I'm like scarred, right? I don't know if I want to talk about some projects anymore just because the smart contract risk, but I feel like you subscribe to me for farming stuff, so I would be doing a disservice by not talking about farming stuff. So do your own research, but I think the best farms right now, most of the DeFi, you get paid out in this farm token, and it's gonna dump, right? So the best farms right now, I think, are foundation subsidized farms, as in Avalanche Rush. I'll talk about Algorand, right? So these L1 foundations that are well backed, they have a bunch of tokens. They're giving out these tokens for incentive rewards, right? Infrastructure tokens that they're just giving out for them to incentivize you to bridge to the chain, right? So talk about examples of that. Or farm to accumulate types like GMX, I'll talk about GMX, Stargate, where sure, maybe these projects are zeros, but they have a clear road to sustainability. Maybe it doesn't get there, but if I can farm it, taking on some risk, then maybe it's worth doing so. That's kind of my mental model. For example, Stargate, right? Right now, Stargate is a governance token. There's really not that much value accrual. This governance proposal just passed where, 1 basis point goes to VE Stargate holders, and then 1 basis point is not much, right? It's 0.01%. So if there's $1 billion worth of volume, then the VE Stargate holders receive $100,000. So really not much. But if you think longer term, if you expect layer 0 and Stargate and more applications to be built on layer 0 and Stargate, then you should expect that there's going to be more volume that goes through Stargate. And sure, the revenue share is only 1 basis point right now, but because right now 3.7 basis points is going to their protocol own liquidity, right? Because they can't give out Stargate emissions forever. But over time, as they earn more fees, as more fees go to the protocol own liquidity, once they have enough POL, then they can turn on revenue share again, where they can, let's say, give 3.7 basis points to VE Stargate holders and 1 basis point to protocol and liquidity, right? So as the protocol gets developed over time, there could be more value accrual to the token. You can't just look at what's happening right now and assume it's going to be the same case forever. You have to dig deeper on the tokenomics, see where the space is going. Stargate, sure. I see this being entrenched. They raised at $1 billion valuation, at least layer 0. And Stargate, I feel like will have less value accrual than the layer 0 token, which is still unreleased. They're trying to raise at a $3 billion valuation, which I think is pretty interesting. But it's a stable form. It's paying out, I believe, like 7-8% on Avalanche right now. So I just have funds on there. And right now, you're being paid to borrow, at least. It's probably not going to last forever, but your borrowers are being subsidized on Avalanche Aave. I feel comfortable in Aave. I feel comfortable in Tether. Everyone floods Tether, but I've heard Tether flood so often that I just kind of ignore it. Maybe I don't fully ignore it, but it's mostly like engagement bait, right? People just like post Tether flood for engagement. Obviously GMX. I have many videos on GMX. I'm not going to spend too much time on it, but these fees, right? These rewards are being paid out organically in the token, right? So right now on Arbitrum, you get 32% in ETH, 29% in Avalanche, right? These are organic, right? It comes from the trading fees that the platform earns. And, with the tokenomics, I'm just like farming GMX. So these protocols, sure, it's speculative right now, right? There's risk, there's smart contract risk, always doing research. Don't risk enough that you're willing to lose. But, maybe a year from now, there's more TVL, there's more use cases. And these protocols, where the revenues outweigh the emissions, they're going to get to the other side. So that's kind of how you have to think if you want to farm altcoins or even buy altcoins. I'm not really buying altcoins, right? But there's that. So let's talk about Algorand farming, right? So like I said, either speculative farming like GMX, Stargate, or foundation subsidized farms. So Algorand obviously is an L1. People call it the CIA chain, like whatever. Their main bridge algo mint, you have to KYC. I went through all that like half a year ago, and I've been farming on Algorand, and there has been an exploit on Tinyman, which is like one of their main dexes. And, they use a different programming language called PyTeal. So, maybe the auditing for these applications are less developed. So there's smart contract risk, but the yields are pretty nice, right? So always you're in research. I also think you can bridge through KuCoin if you want to, right? USDT, USDC, and Algo. So you're in research, but I'll just talk about some farms on there. So AlgoFi is the money market. It borrows and lends are being subsidized. Like some time ago, like this used to be insane, right? But I guess token prices are down. There's more TVL, so these rates are okay, right? But you're being subsidized to lend and borrow. And for example, you can borrow USDC and SDBL, which is like their over collateralized stablecoin, and you can deposit it. Or sorry, you can deposit it into these AlgoFi farms. They're both money market and the DEX. They have like a stable swap called the nano swap. It's like Curve, right? So right now, USDC USDT pays out 70% in Algo, $82,000 in TVL. So it's gonna get diluted, but it's I'm in there, right? It says your farm, right? I have like $2 on there, right? It's like yes, $2 farming. Just kidding, I have more, but I have some farms on there. An example is also another DEX is Tinyman. They were exploited some time ago, so it's kind of scary. But I have like assets in like a bunch of these Algorand farms, just a little bit, right? Just because I feel like they've all raised money from VCs. They're like backed by the foundation to some extent. So one day they will probably have a token. So why not, right? So I'm farming on there, right? These yields are pretty decent. But Algo USDC, right? Will the Algo price keep dumping? If so, then yeah, I mean, do your research, right? But these farms are available. And Silvioooooooooo, right? I think he's a really smart fella. He's professor at MIT. He won a Turing Award for cryptography. The signs are there, right? And I've often had this mental model where I was like, like I think Silvio is like just one cycle behind Emin, right? Emin Gunseer. Emin Gunseer, he has a better jawline, obviously, right? And I'm more bullish on his jawline than Silvio's, lack of jawline and some hair. But why not, right? If you can farm it, you bridge to the chain, you try it out, it's farming, right? And like I said, yeah, like foundation subsidized farms, Algorand, Near, Avalanche, I think those farms are okay, right? There's always risk. But also, if you want to be more spicy, then there's farms like GLP, GMX, and Stargate. And I'm sure there are a bunch more that I'm missing, but that's kind of how I'm thinking about it, right? So I think Bitcoin is safer, Ether is safer, infrastructure plays might be better than just like buying random DeFi tokens. I feel like most DeFi tokens just should not be touched right now. There's bull market technical debt. There's too many bag holders. There's too many bad memories. That I think the better risk reward is to look for new projects that learned their lessons from the past bull market that will launch with better design, better tokenomics. That probably has better RR. That's not to say old projects can't come back, right? I feel like Uniswap, Aave, Compound, like those like tokens could come back over time as they revise their tokenomics, right? So you always have to keep an open mind. But that's just my mental model. I feel like newer stuff will do better than older stuff. So in terms of, I guess, DCA, buy, sell, whatever strategies, no one knows what's going to happen, right? I mean, there's contagion risk, there's macro, but I feel like the best way to approach it is to just be cautious, right? Develop a plan and stick to it. And one mental model that could help, this is my friend Gammy-chan, Gammy-chan, and he posted this on Twitter where you can kind of have a set rules of like when you want to buy and developing a plan beforehand. I'm not going to go through everything, but this could be an example, right? Maybe you can screenshot this, something you can use to help you guide, I guess, how you manage risk, right? So if your thesis about the market is just inflation based, then maybe you just buy when the Fed reverses stance. This is the latest, but it's also the safest. Buy when the CPI stops trending up. You're not too late to it, but you're also taking on risk, right? Because obviously, for whatever returns you're expecting, there's more risk, etc. And market agnostic plays like buying at the 200-week SMA, right? We're there. Maybe you just wait for particular prices, right? Maybe you're just like that bearish, right? So I feel like having these plans is the best way to approach the markets. For me, I'm bullish the industry. I'm committed to the space. I'm going to continue to make videos. I'm down bad, but I'm going to be fine, right? So hopefully I'm going to be fine. So just going to keep looking for farms, look for new opportunities. And the one thing I will leave you with is new vocabulary, right? Crypto vocabulary. And I feel like crypto is a gifting good, right? Gifting good, GG, right? Crypto is GG, right? Crypto is definitely GG. And a gifting good is a low-income, non-luxury product that defies standard economic and consumer demand theory. Demand for gifting goods rise when the price rises and falls when the price falls. I feel like this is what crypto is, right? On the way up, it's like, oh man, like I love buying Bitcoin at $60,000. And then on the way down, it's like, I ain't touching that shit at 20K. Are you kidding me? But that's kind of how micropsychology works. And to be frank, like no one could predict the future, right? It's crypto that I don't know. Like my bias is that it's not. But if you think DeFi is dead, then there's nothing I can do, right? So understanding market psychology, I definitely didn't play the cycle well. I outperformed like Bitcoin and Ether and whatnot, but I like definitely held Bitcoin and Ether all the way down because I think of them as like longer term assets and whatnot. At least like I have a longer term time horizon, but obviously like when it retraces to like 20K and $1,000, it's like whoa, it's kind of shell shocked, but it is what it is, right? So that's the end of the video. Hopefully this video is useful. The future is uncertain, but hopefully my videos, right, my existence can be the one certainty that will help people get out of this bear market, like whenever that is. So thank you guys for watching. Crypto is GG. That's the takeaway of the video, and have fun farming out there.